A very warm welcome to the Corporate Investment into Forestry and Biodiversity Conference, and congratulations, of course, to Warren and Hayley for putting such a great event together. I mean, it's high time this sort of thing was done, and I was thinking it's probably 22 years I've been waiting to give a presentation like this to a large informed audience about the forestry land and carbon offsets and so on. And I should probably also just say, of course, I'm not a carbon expert. I'm a forestry risk expert, if you like, and so is the team, Ming and Dan, who are listening probably in the wings. But I've put the two together and just given a bit of background to why forestry is seen as a 15-20 year solution. So we're going on to slide 1 now. And this is going to happen very quickly. There it is. Thank you, Hayley. A brief background. Yeah, forestry is part of Current Global. We're an agency, and we've been insuring trees since 2005. The paper, that is to say, the insurance documents we issue are A-rated. They come from Lloyd's syndicates. And for the bigger accounts, we assemble through our binder broker team in Besso, we assemble support through international reinsurers. So that is really what we do. And on the next slide, you will see where we do it. So a global map. Everything in green is where we've had inquiries but haven't yet written an account, or certainly not this year. Everything in sort of greyish blue, we are currently writing forestry there. And as you see, over 30 nations. Now, the theme of my presentation today is probably the obvious to all of you, because you're here, that forests can contribute to the reduction of greenhouse gases. And because of that, they have a great part to play. But of course, forests, as I can tell you ad nauseam, are vulnerable to natural hazards. And we'll have a brief look at that later on. The rate of loss, this was in the Financial Times today, but other publications as well, is reported to have gone up 5 times in 50 years. My own feeling, the feeling of my team probably is that's an understatement, but it is still a significant fact. And we are busy generating risk solutions with the biggest brokers there are, that have all the ancillary covers that you might want for your cover to get something that's very suitable for forestry carbon. As you know, globally we have a problem. So a little slide from the 6th IPCC report that says it all. Unless there's immediate, rapid and large-scale reductions in greenhouse gas emissions, limiting warming to 1.5 degrees will be beyond reach. Well, that may not mean a lot to some of you. And you will see in the course of this that actually in some places we're already 1.2 degrees above the mean. So this, the carbon credits in forestry, yeah, it was always the X factor in our business plan, but nothing sort of happened for a very long time. However, the nub of it is forests suitably managed, verified and certified can be a source of genuine carbon offsets. And as you know, there's a lot of sort of negative publicity about that, and in some cases for very good reason. And the target is that by 2050, the world must remove 10 gig. It's interesting that forestry produce relatively cheap offsets, but it's the only option at the moment if you want to generate high volumes of CO2 offsets. So for the next 15 or 20 years, we might be able to produce 2.5 gigatons of carbon out of the atmosphere. And this carbon dioxide removal is, of course, locking it away within the trees, the roots, the branches, the stems, and most importantly, the soil. So at the moment, and we've noticed it in our day-to-day operations, there's a race to obtain carbon credits, with people coming to us about, obviously, insurance and what to do about it. And that's the one. So as you see, the temperature summary, which is a compilation of various climate models, shows that we're already at 1.2 degrees above the mean, and that last year we had one of the 3 hottest years ever at 1.2 degrees above average. And we are witnessing unprecedented weather extremes in every global region. And there's a slide I'm not going to show you because it's too detailed, of all the different types of extreme events, statistically extreme events that have happened all over the world last year. And we're heading for a +3 or +5 degrees centigrade increase without intervention. Well, we have seen what's happening in Thailand and obviously the USA, Australia, with just a 1 degree increase. So we're very worried about not being able to constrain global temperatures. But as I said there, fortunately, there's some global agreement on intervention, what to do, and so on emission reductions and the use of forestry for immediate term, not even short term, but immediate term CO2 absorption. And many projects, the Reforestation Accelerator being just one of them, planting forests throughout. And I put Hayley at a disadvantage because I'm not sending her the signal early enough. Recent extremes. Here we are from the Siberian fires, a Greenpeace slide. I love it. I think it's rather beautiful, but wish it wasn't there. And on the next slide, Hayley, you will see a couple of slides to put into context what a wildfire is like. Years of my career, I'd never really seen forest fires other than small ones. But on the right, we've got Ophelia. You remember Storm Ophelia came up the west coast of Europe, created a firestorm in Portugal, and a consultant, forestry fire consultant, sent me that image on that very afternoon. Just staggering. And you can see the diminutive community at the bottom. It's out of a nightmare film. And on the left, Black Saturday, a very similar sort of image, which shows you the size and the power of these things. And that one took 6 weeks to put out, and so many people died. And coming on to the next slide, you will see a rather haphazard list of some extreme losses. I've just been tracking the big ones that hit the headlines, and certainly the west coast of the States, where we have been in the past doing a lot of business, just to see how the numbers are stacking up over the years. And I've inserted the 2021 numbers there. Oregon State is not bad this year, actually. That's probably much about average. Washington, okay, it's 500,000 hectares. And California, though, has increased substantially on last year at about 1.9 million. So if you take those 3 states together, almost, well, it's 2.7 million hectares of forest and wildland, forest, mixed forest, forest land. It's not plantations, of course, it's managed and it's unmanaged forest, but it's forestry land. And that's the point that we want in relation to biodiversity and carbon. Some stats on the left there, Australian fires, 2020, 18.8 million hectares, unbelievable. Most of that was native wildland forest, if you like, 130,000 hectares of commercial plantations, and some, and you may be in the audience, have told me that you didn't lose too much in those fires, but it was a very scary thing, and the total area burnt was more than the entire UK land area. And within that, Victoria and New South Wales lost 15 to 21% of the broadleaf forest. So you're talking about eucalyptus and other things, whether commercial or state-owned or private. Now, the shock before that was Chile in 1617, where 2 regions, it was regions 7 and 8, you can see there, the loss was 24% and best part of 32% of forest plantation area. Extraordinary event, and one that really shocked the insurance world. And moving on to 9, the reason why, well, I've said it, temperatures are going up. So a couple of slides on the left there show the August temperatures on the US West Coast over since 1895, a steady increase in mean temperature. And if you look at the temperature trend since 1950, it's pretty level. but that just means the whole area is drying off and it's making itself ready for fire, if you like, should it occur. On the precipitation, the long-term mean is pretty flat. But again, look at what's happening since 1965, a pretty steep decline. So you could insert those charts anywhere in the world and you see something very similar. Certainly we've looked at it in Thailand, Australia, and other places, and that is the trend. So it's something we cannot ignore and we have to plan for. Now on the right, we have last year's major fires on the US West Coast, and I'll come back to that. But that is, okay, that's 2020, but you can see in the encircled area to the right of that, areas of different color, which represent pairs of years of wildfires. And as I said, we'll come back to that. But a wildfire is not a wildfire. It's not always in the same place. It's not all spread over the whole country. And at the next slide, we move from fire to wind. This is an increasing issue, certainly in our portfolio. And I've added there hurricanes and localized windstorms. And that's because the impact of localized windstorms can be just as devastating as hurricanes. Certainly, we found this in the Caribbean years ago. We were looking at things like bananas and hurricane protection. But elsewhere, we find that a localized windstorm can do extreme damage to owners of forest or tree crop plantations. And of course, the thing about localized windstorms, it's not mapped, whereas hurricanes are. So you've got some clue, if you like, as what's going to happen. Again, a couple of scary slides. The first, it was a screen capture off my phone, 2017, thinking, wow, three hurricanes in one image. That's not going to happen again, is it? But there you go, September 2020, almost this time last year, but for a week, 5 cyclones crossing the Atlantic towards the States. And as you know, Hurricane Laura on the 27th of August was the result, was one of the biggest ones. A lot of damage to forestry, about 1.5 billion, and an immense amount of property damage. And we've just had Ida, almost to the day, which was the same strength as Laura, hit Louisiana rather than Texas and Louisiana. Damage, well, there are a number of estimates, 25 billion to 60 billion. It depends which source you have as to what the gross loss due to that will be, because obviously it went right up to New York and flooded subways and so on. That's a nice little silence before we come on to the takeaways for carbon investment. So I've sort of finished the carbon bit, really. But to say the climate is warming with extreme events on the increase. And because of that, you really do need to choose your investment sites carefully. So I come back to this Oregon map. Everybody thinks the whole of the USA is burning from coast to coast. Well, it isn't, and nor is Oregon. And you can see that the west forestry coast, almost under the E and the G of the word Oregon, has a very good long-term safe record. So it is the first thing. Don't write off any continent or any country for a good site for your forestry investment, but have a good analysis of where the winds are and where the fires are. Obviously, you want to avoid high-frequency hurricanes. In the Gulf Coast, they're probably about every 4 years, something serious. So that's probably not a good place. And when it comes down to protecting your investment and, of course, your credits, well, the risks that you can't afford, you need to lay off to insurers. So what are the insurance solutions? I will start with the traditional indemnity product. You, just like your house, you insure it, it burns down, and they pay you for what it was worth. This is available all over the world. And those are the whole group of perils that we commonly cover under such a policy. Fire and wind, though, those larger circles are exactly where most of the damage occurs. And I've said that 95, 99% of forestry losses come from those two causes. And the others, things like flood, for example, in a forest tends not to be catastrophic because of valleys and hills and mountains and so on. Whereas fire and wind, of course, can cross a mountain very, very easily, or indeed fly through the air and start a fire somewhere else. So in order to price these, we can measure historic losses now. We're all using satellites, and Forestry is no exception. So we're using the EarthBlocks tool, which I'll mention again later, to do burn scars for the last 12 years in any location in the world. And that is something you can do, or we can do for you. And next year, we're hoping to do the same thing on wind, which would be fantastic, because wind loss information is like hen's teeth. You will not find it very much. So what's happened to the cost? I can only talk about the business we do. And really over the last 6 or 7 years, I've just gone back over all our policies. And obviously it includes, small growers, small family farms, half a million dollars, say, right up to the investment fund, which might be 1.23 billion or something. So it's a very approximate figure, this. But what is clear is a trend. And the premium rate that I put there, ballpark 0.35 to 0.5 of your investment, that is the value of the whole thing, is creeping up. So there was a bit of a shock with the Chilean fires, as I mentioned, and it increased continuously. We stopped writing Chilean business until the rates there got a bit more sensible. And then we had Hurricane Michael that bombed into Georgia, if you remember, wiped out lots of people's pension trees, if you like. Pension trees, very, very sad, the damage. And within a couple of years, the Australian bushfires, just a nightmare, quite a record. And then Hurricane Laura. And of course, well, as you see, I haven't updated it, but Ida will be there as well. So rates are going up and insurers are being more and more cautious. And that really is the limit of the indemnity product. That is to say, we can't keep rolling this out as prices keep zooming up. Maybe we need other solutions. So you'll have all heard of parametric products. It's basically a product designed, priced purely around data, usually climate data, wind speeds, temperatures, water, rainfall, so on and so forth. The beauty of it is that, of course, rainfall, temperatures, wind speeds all relate to physical loss on the ground. So in other words, it is a proxy for the risk that you run in any particular location. We don't have a lot of experience on pricing. This is done by specialist units within our Globe group and the bigger group of Current and independents. They can tend to be a bit expensive, but I think that's an educational process that we have to work with them, because these people, they're very, very clever statisticians and so on. They don't know anything about trees. They're just analyzing the numbers for what the numbers can tell us. And this year we started with our first, I call it pseudo-parametric tool that Liberty has issued to be used in the States, where we're measuring percentage damage by satellite, and they're applying that to the schedule of the insured. And there is a payout based on that. So it's a bit of a mix of parametric and indemnity. Then we have drought. Now, this has come to us through Global Parametrics, and it's a great thing. It's a very sophisticated drought insurance that we'll talk about in a moment. But for those planting trees, or fruit trees, any sort of trees, obviously in the first 2 or 3 years or 5 years, depends where you are, that you're very sensitive to shortage of water at the key growth stages. So this is a sophisticated index that can be the basis of the parametric. I think I've spoken about the next slide already now, but I will carry on with this one. And under development are a couple of ideas. The wind parametric, we would like to use the data we're going to amass from the EarthBlocks tool that we hope will come on stream January or so next year. So we can have a look at that. And there's also the possibility of doing a fire critical weather day parametric. Nobody's done it yet, but the data's there, and it's if you correlate fire critical days with mega events, you will capture all the mega events. There may be 1 or 2 that don't have fires, but that's an ignition issue. And moving on, we have the water balance index. So the key thing about this is just not about measuring rainfall. It's about balancing the precipitation or rainfall, like snow or rain, against the transpiration. And of course, transpiration is off surfaces, ground surface, soil, plants, It's transpiration from plants themselves out through the leaves. And therefore it is, if you like, it's measuring the net availability of moisture within that particular crop. And this chart shows you 1980 to 2019, a series of wetter years and dry years. And horizontally along the bottom, you have the 1 in 5 year, 1 in 10, 1 in 50, 1 in 100. Now, the idea is that the client would decide what frequency or what severity of event actually affects his or her business. So is it a 1 in 10? Is it a 1 in 5? And clearly, the more frequent such a dry year might be, or indeed a wet year, if you're talking about rubber and harvesting things, then that will affect the rate that you pay for it. And moving on, as I said, this is superior to a simple drought index. The high fire risk critical days, bit of a mouthful, but a very interesting chart that's come out of IPCC data and assembled by Area Technologies in Paris from work they did in the H2020 program that's just finished. All the green lines, it's obviously southern hemisphere here, because you're getting hot days in January, February, March, and November, December. So this is a southern hemisphere example, and the green bars say that the percentage of days that will be high fire critical, in other words, more than 30 degrees, less than 30% moisture, and more than 30 meters per second wind speed, was about 1% of days in the month over history, if you like, over the 20 years. But that is expected to go to 3%, 3.5%, so a 350% increase over the next, well, what have we got left? 30 years to 2050. This is well, yeah, take it in, because this is what we're up against, as whether insurers or investors. We need to get a grip on what can happen. And I don't have a slide on the average, but it can get me going how useless the average is, how misleading it is, because it takes no account of volatility. So we looked at products, we looked at indemnity, we looked at parametrics and various forms of new parametrics. And at some point, you're going to want to at least investigate the price of that insurance with an insurer that perhaps knows something about trees. So you need to get your loss data. What's happened on that site in the past? Many established companies will know exactly, but others, it might be quite a difficult task. But as I said, that's something maybe we can measure directly going back over time. But every insurer will ask you, what are the losses? And what's causing those losses? Is it fire? Is it wind? Is it flood? Is it ice storm? And so on. These days, we do need to know the boundaries of any location. These are KMZ or shape files. Pretty ubiquitous these days. But if you don't have them, you will need to do that so that we know exactly where the boundary is, which means that the loss data that we measure is precise for your chosen locations. And remember, across the countryside, you get microclimates wherever you are. So it's very relevant that we know how that behaves. And you need to have a written, that is to say, an organized risk management plan and procedure, just so we know that you're thinking about fires, you're thinking about what causes fires, community relations and so on. As I said, that good fire risk management can minimize all but extreme events. And finally, what is there? Well, it could be mixed forestry, and stuff on the ground, but we need to know, what it is. Traditionally, we need to know the value of those particular trees, but now, of course, we're very interested in what the carbon output is over time and how that's been measured. And in the next slide, we may find out more about that. Well, not really, but we're looking at carbon credit comprehensive covers. Right, well, you're dealing with carbon, right? So carbon ideally should be around for 100 years. That's the ideal, and that was certainly what the Californian Climate Action Registry was trying to do back in the 2008 and 9. So that's, if you like, the gold standard. That's what we're trying to do. So if that's the case, then any insurer needs to have a policy that continues over the life of the carbon. Well, that's not going to happen, sadly, because no company is there forever. There are plenty of very famous examples of huge companies that have disappeared. So, but we can probably do a rolling program. So you drop a year and add a year, so that any investor has perhaps 2 years of cover ahead of them. So that's a key component, I think, of this. The second key component is it's not just going to be about the stuff that we do in forestry at Globe, which is the natural hazards. It's going to be about, and we, by the way, we cover natural hazards, the infrastructure, that's fences, bridges, sheds, irrigation pumps and so on, and strike rights of commotion, but looking at the more sudden and accepted risk of political risk or expropriation. That send cover, that's a new word on me, I learnt it last week. So every day's a school day, but there you go. Confiscation, expropriation, nationalisation and deprivation. And I'm sure there are differences in some of those meanings as to whether you get paid for that or whether the asset is just taken without any compensation or some variety in between, surety, process risks and so on. So our idea is to have a single policy with different sections to cover that. And that would apply to the insured interest. Well, it could well be the trees, but it's more likely to be specifically the carbon credits, which are registered, and therefore, if you like, well, we know where they are, and we know when they go, and we know when they have to be replaced. There's somebody that is reading my mind about that. Thank you, Ailey. One slide actually out of the Californian presentation years ago just sort of shows you what's going on. So you've got forest or forest land projects, biodiverse projects, whatever. You've got the registered CRTs, was just the mnemonic they use, but the registered carbon credits in orange, and the different projects varied. They had a risk scale. So depending on the risk, determined how much went into the buffer. And the buffer is basically a sinking fund for carbon credits. So if any have lost, and they're lost by that tree being damaged, blown away, broken, or whatever, stolen, it can be replenished from the carbon buffer pool. That's the purpose of it. The buffer pool has varied in size from 20% to 5% to all sorts of percentages. So it may differ from where you are, and it may differ by the carbon accreditation system that you're using. But obviously, if you can back that up by insurance, then you have a belt and braces approach. And the reason you might need insurance is when you start with your first investment, you've only got one. And if a fire starts there, that's it, you're done for. Once you've got a portfolio, perhaps in different parts of the world or working together, then of course the loss of one project or one part of a project isn't going to impact on your ability to provide carbon. So your risk profile will change over time from start to finish. There's some text there from years ago, but it is relevant. And there's all sorts of things we can also look at. Can insurers take registered carbon credits in lieu of premium? It's not Bitcoin, but it's that sort of idea, isn't it? Particularly as the price is getting stronger now. And 10, 15 years ago, the carbon price sort of collapsed, and it brought everything to an end, really. So that's the way we see it working. We see insurance working with carbon buffer pools to make sure the buffer pool can be, if you like, released to release funds, or replaced by the insurer, who might have their own supply of registered carbon credits. And I think this is a penultimate slide. Lots to talk about in this, but let's finish here for your sanity, probably. Carbon insurance will involve entire marketplace. So start off, know your carbon stocks in biomass times the best protocols. So Vera, things like this are essential to provide trust to the whole system. Absolutely core. The other thing is, of course, the protocols are the standards by which we will design the insurance cover. So it could be that the same policy on two different projects using two different certification regimes, it might work differently, because when is a ton of carbon lost, for example? When that tree dies, is it emitted immediately, or does it take 5 years to emit? So that's the starting point. And if you like, that's the bit where if you talk to us, we need to spend a lot of time researching that. Where are the projects? What are they? What's the risk profile? What's the protocols? How do we do it? The rest is all pretty standard. Recent forest losses have shut the insurance community. So pricing will be difficult, but that's why we're going to parametrics, because they will give access to a lot of insurance companies that know nothing about trees, but they do have a lot of capital. And that is why you'll hear more about parametrics over the next 12 months. So accessing international insurance, I gave you a to-do list if you like, and that's just repeated. That is repeated there. And new insurance structures may be required. I've talked about multi-year programs. I've talked about comprehensive policies which have forestry cover, physical cover, expropriation, and so on. But also, maybe this is something for investors to think about. A corporate forestry captive, perhaps that could be set up. So you put some of your own capital into a captive, and you become the first insurer of forestry captives in that area, and of course take a return on that, which might well equal or be better than standard forestry returns. Perhaps we should start a global forest carbon mutual. This maybe is wishful thinking, but you've got to have the idea. And then finally, as I said, the comprehensive carbon insurance policy. And I think with that, we are done with a final sign-off slide just coming up any second. There it is. So thank you, Hayley, for that. Thank you for listening. As I said, lots and lots of people are coming to us at the moment. So in a way, we are relearning everything we used to know about carbon, and be very happy to do so. So thank you very much. So a list of questions there.
Thanks for that, Phil. There's been quite a few questions, so I've put them in the chat. So if you want to answer a couple, and then any outstanding questions, they can head over to the ForestRe table in the lounge.
Right. So, do we already have reforestation in Russia? No, Russia's a tricky one, isn't it? And huge problems. I mean, there's a sort of systemic problem of just about doing business there. So, but we have, we've offered to insure Russian assets. You must understand, we do not set up projects of forestry reforestation. So, we have an open door, but we've only quoted probably in 15 years and 1 or 2 Russian investments, if you like. Does the increased fire risk affect new in the same way? Well, the thing is that there's a whole lot you can do in protecting your forest from fire. I mean, part of the thing is, is your crop growing separated by 1 meter or 2 meters? Do you have the fire breaks, the internal roads, internal access? Do you have the water there? Do you have surveillance? In other words, when a fire starts, you know about it within 10 minutes. All that sort of stuff. Young trees certainly burn rather nicely, and there's very little left at the end of it. So in our minds, young trees mean fire vulnerability with very little, well, no recovery at all. And old trees mean resistance to fire. The fire may pass through and not kill the tree. And the opposite is true of wind. So young trees will not be affected by wind, but older trees certainly within 10 years of harvesting, or whatever your rotation is, very vulnerable to wind, and that's overlaid with rainfall. I don't know if that's will the slides? Yeah, the slides will be available. I think the next question is, I'll leave that there'll be experts that will answer that question about is it necessary a reforestation project to be RED or RED Plus certified for offsetting purposes. I'll pass on that one, if I may. That's beyond my ability to answer that at the moment. Liability, yes, but no, absolutely. Liability, yeah, good spot, as we say. That should be on the list. Certainly, liability would be part of this. The whole idea is you don't want to end up with 20 different policies, 20 different insurers, probably 5 different brokers. It would be like a rat's nest or something. So absolutely, the whole idea here is, if you like, the the brokers will put it all together for you, and you have a single policy which will include liability cover, whatever liability that is. Yeah, well, it's a very good question, slide 20. And somebody asked me yesterday, and I want the same person asked me again. But the thing is, it can ensure permanence in the sense that a lost credit could be replaced. Of course, it's not the same credit. You can't lose a credit and just think it's going to re-emerge. It doesn't. It's got to be replaced with another forest land offset, if you like, a like for like, because you probably want those credits, and that's why you invested in it. You didn't invest in it to have a fuel switching credit or, I don't know, carbon capture and storage credit. You actually want forest carbon. So if you like, it's permanence by an alternative route, and in time, insurers should be able to have their own resources to do just that. Maybe not the best answer, but it's the best I can do at the moment. And it says all done at the end, which probably means I should say goodbye. That's what it's telling me. So thank you very much once again. Quite a lot to get through, but we're here and very, very keen to work with any of you to contribute what we can and to learn from you, of course, on what the issues are. So thank you very much.